From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Here's what's ahead. K-State's Glynn Tonsor on the cattle markets. He'll talk about what was behind the just-reported record U.S. beef export demand in August. And Glynn will go over the updated outlook on Kansas cattle feedlot returns from now through midsummer of next year. Also, K-State's Robin Reid will talk about a new service that the Department of Agricultural Economics will be launching soon, the Office of Farm and Ranch Transition. It'll provide various forms of advisory assistance to retiring producers and beginning farmers in facilitating a successful succession of a farm or ranch operation. Also, this week's K-State Agricultural Events calendar is ahead on this Agriculture Today. Thanks for listening in once again. This is the K-State Radio Network and Agriculture Today. To the cattle markets we go, and frankly, nearly across the board, a positive tone to what we'll talk about today. Joining us is Glynn Tonsor, livestock economist, K-State Research and Extension, via phone today. Glynn, for starters, we'll look at the trade this past week, and sure enough, you look at the cash market on both counts, feeders and feds. Good news there.
Yeah, they were steady to $2 higher, depending on what weight class and what market we actually quote. But yes, it was good news, and that spilled over from the wholesale beef market as well. So let's just run through those numbers. The 5 market fed cattle price Friday, AMS called at $127 and change. It's about $2 higher from the week before. That's a little bit stronger than we saw on the board. So December live cattle contract came in at $129, up about $1 for the week basis. For those that are following that, it's a difference of 2 there. So -2, we're right on par. Dodge City feeder cattle was called steady to $2 higher, depending on exactly what weight class and what lot AMS is looking at. I wrote down 2 lots just for context. Both are pretty strong compared to last year's prices. 66 head, weigh in 526, sold for $181. A bigger lot at 131 head, weighing 622 pounds, sold for $170. And again, those prices would be quite a ways ahead of where we were last year, which is good. And that strength in the cash market was supported further and forward by the board. So in this case, the November feeder cattle contract closed about $157 and was flat on the week. It actually got a little bit weaker as the week went on trading, and nonetheless, the board ended up for both live and feeder and cash. I always quote the Kansas markets or the 5 market on feds, but really around the country, it was a pretty good week.
And in tandem, then, as we look at the wholesale beef trade last week, not too bad at all.
Yeah, so we had some improvement there, particularly in choice. So choice is up about $4, $286 on Friday compared to $282 the Friday before. And select came in basically flat, so $263 this Friday, right on par with where it was before. It's also reassuring. We're going to talk exports and so forth here in a moment, but there's well-noted logistical challenges moving products around our country, and the ability to seize on strong meat demand is contingent on logistical realities, and I was pleased to see that positive beef demand story this past week.
And if folks listen to us regularly, they'll know that you keep tabs closely, Glynn, on the actual slaughter levels and whether we are motoring along normally. What are your latest numbers there?
Yeah, we're motoring along very well as the summary point for the week. So the USDA's initial estimates here through Saturday were 668,000. That's up notably from 640 the year before. That puts year-to-date for 2021 slaughter up more than 3%. Why am I interjecting that? We're having these higher prices while we managed to get slaughter numbers up compared to last year's disrupted volume. That's another just indirect confirmation of strong demand. So we're pushing more cattle and more beef through the system than we did, partly because of COVID logistical things a year ago, of course. But able to do that with higher prices is reinforcing demand strength. We'll get to that here in the next few remarks, but I don't want people to lose sight of a lot of the elevated cattle prices we're experiencing now and expecting in the next few months is driven by demand strength story.
Well, let's tap into, if we might, somewhat in advance, but the numbers are coming together, your latest meat demand monitor. This is for the month of October just passed here, and this is a nationwide survey that you conduct of consumers on their meat demand tendencies. You'll release this formally later this week, Glynn, but preliminarily, what are the numbers suggesting there?
Yeah, so I've already crunched the numbers. They're just under review at USDA because this is a beef and pork checkoff funded project. So everything gets formally approved before it goes live. Those that like this can watch fragmanager.info. If not today, probably tomorrow is my best guess when it'll be posted. But without getting into narrow weeds, I could put a bow around what I saw in the analysis. And that is retail meat demand domestically remains up, and food service demand continues a couple months of being flat to a little weaker. And the latter is a little more concerning, but just a little bit more caution going to restaurants and so forth. Foot traffic is what that reveals, but strength in the retail demand front. And if you add to that, a minute ago we talked exports, 2 of the 3 legs are doing very well. I will share, I've asked since March of this year, so now for whatever it would be 7 months, what do consumers expect retail meat prices to be in the upcoming month? So I'm asking that survey for consumers to reveal their own expectations. And persistently, month after month since March, ribeye steak, ground beef, pork chops, and bacon are the 4 categories I'm asking on. Consumers continue to suggest they expect higher retail meat prices, and that continued again in October. And even more narrowly, 2 of those 4 categories, consumers were expecting November retail prices to be up more than 3%. That fits right in with a much broader discussion on consumer food inflation across all things they buy. I interject that here because consumers have been pretty much accurate on that, but there's nothing saying they have to pay it. I mean, it's good if they continue to be willing to, because that's a demand strength. Mm-hmm. There's a mix of both supply side, so think labor challenges, logistical transport costs, and the like, that are pushing prices up. But there's also a demand pull factor that's pulling these prices up, and we need to keep monitoring that, pun intended, in the meat demand monitor can hopefully help us do that.
Look for that coming out again on agmanager.info in the coming days. And to couple that with the beef export demand report for the month of August, that was just posted not too long ago, and a record was set here. Those numbers are enthusing, to say the least, Glynn.
Yeah, they are. So August, which sidebar for our listeners, is my birthday month, so it's a glorious month in many ways. But the August 2021 index, again, we're talking U.S. beef export demand, so demand by foreign buyers. So that's Canadian, Mexican, Japanese, and the like. That index value I tracked came in at a value of 261. The base period is equal to 100 in January of 2010. And for my fellow numeric geeks out there, that means we've had a 161% increase in demand for U.S. beef by foreign consumers since January of 10. Wow. I added in here just to give some additional context. USNEF, so the United States Meat Export Federation, has also, of course, been, as part of their job, is to monitor and comment on what the volume and value of beef exports are. And they noted for the month of August that export volume was up 21% compared to August of 20. It was the second largest that we've had during 2021. And at the same time, the value, the monetary value of those pounds went up 55% and exceeded $1 billion. That's billion with a B for the first time. So if you get volume up by 21%, value up by 55%, you cross $1 billion for the first time. Everybody in the industry should take note for several reasons. That's a massive infusion of economic resources back into the industry. I often say we sell everything but the moo, or if I'm giving a pork talk, everything but the oink. And where I'm going with that is we find markets for all products, right? Whether it's the hoof, the tongue, everything. It's not just in the case of beef, ribeye steaks, and ground beef. We sell everything to the extent that markets are open and allow it. Throughout our discussion here this morning, I've been talking about domestic retail versus food service separate from the abroad export markets. All 3 of those market channels work in concert to help us sell everything except the moo. And when you see those kind of bottom line celebratory statistics, we should take note. But it's also a reality of those markets at work, and we need to recognize that and do our best to try to keep them open and let consumers that value those products the most get their hands on them, because that ultimately helps producers.
The question comes up, can this pace be sustained with our supply chain issues in recent weeks and months well in mind? When the next export report comes out, will we see similar numbers?
Well, I certainly don't expect 20% volume and 55% value year over year to persist forever. I won't use the term sustainable because I think it's misleading. So I suspect we'll slow the rate of strength here at some point. Whether that's going to happen in September or not it might. But I think the core point here is global demand for protein is very strong. China's getting a lot of discussion here, and rightly so, but it's not just China. I mean, the U.S. beef export portfolio is pretty diverse. We have several major customers now, and the general economic environment is pretty strong, wanting our product. And I think the buying interest is going to sustain for the next few months. I hope and I'll put hope in capital letters here, I hope that logistically we're able to get it out. There's a lot of chatter about concern about Christmas gifts and so forth getting here in the mainland. The reverse is the beef trade is hostage to the sending going the other direction, is the ability to get the ports open. I think we're making progress. It's just a function of how fast we can make that progress.
Yeah. And we'll finish with your latest calculations on returns to feeding cattle at the Kansas feed yards. And as has been anticipated, fortunes will turn for our cattle feeders, and apparently that should start relatively soon.
Yeah, so as you noted, Eric, the projected bottom line net returns for somebody that's fully exposed to the market, is not hedging inputs or outputs here, are expected to improve. We get out into 2022 in particular, $25 to up to $95 per steer positive returns as we go from February to May. That mainly reflects the increase in expected fed cattle price. So $10, in some cases $15 per hundredweight higher expected cash price is embedded there. But equally important is about a $10 reduction in cost of gain is projected also as we move from now to the end of the first and beginning of the second quarter of 2022. I'm probably a little more confident in the Fed price than I am the cost of gain. For those that monitor this, please monitor your own cost of gain. I think there's probably more individual variation than maybe in the past on that front. But nonetheless, my best assessment is we are set up for the next few months for Kansas feed yards to have an improvement in their returns.
Great to hear that. And that, by the way, that information found at agmanager.info as well. Glynn's latest projected values for finishing steers in Kansas feedlots, taking us through midsummer of next year. Glynn, as always, good input, and thanks for sharing it. We'll talk again soon.
Thanks for having me on, Eric.
He's a livestock economist with K-State Research and Extension, Glynn Tonsor, and we'll be back with more for you on Agriculture Today. Agriculture Today continues now. Our pleasure to inform you about a new development out of the Agricultural Economics Department at Kansas State University. It's just coming together and will serve a quite vital purpose for agricultural interests and farmers and ranchers in particular in the state. It'll deal with farm and ranch transition. And the individual who's been spearheading this is with us now, farm economist Robin Reid of K-State Research and Extension. She's been working with others to create what will be, Robin, the Office of Farm and Ranch Transition out of K-State. What's it all about?
Well, first of all, Eric, I am delighted to be able to talk about this and delighted that this is coming together because this has been a career dream of mine come true, to be launching something like this. So basically, we know a need is out there. We know the need is great. The baby booming generation is retiring in, the next 5 to 10 years. Some of them have already. So what is going to happen to these farming operations? I think we all recognize that, but I'll just throw out some statistics here. So 2017 was the last census of ag, and in that census, 40% of the primary producers on our Kansas farms were 65 years and older. And again, that was 4 years ago already. New and beginning producers, which are defined by USDA as having been farming 10 years or less, make up 17% of our principal producers in Kansas. So clearly there's an unbalance here of our retiring farms and our beginning producers. So, what is that going to do here in Kansas? And, this is not just Kansas, but a trend across the U.S. We are going to have less and less farmers, bigger farming operations. I'm not necessarily saying that's a bad thing, but what to me is disheartening is a lot of these farm families that have worked their entire lives for their farming operation that might be second, third, fourth, fifth, sixth generation, and to not have somebody to take that over and to see that dissolve into somebody else's larger farm is quite heartbreaking.
The mission of this center is to bridge that gap then between the retiring producer and a prospective younger new operator?
Exactly. So really the long-term goal of this office in our Department of Agricultural Economics is to increase the number of beginning farmers and ranchers in Kansas through building a program to kind of help break down those barriers for young farmers to get into farming, to have the technical skills and financial expertise to be successful farm managers, and just to also provide technical support for our families that are transitioning their farms, even within their own family, and how to make that arrangement equitable to the retiring generation and setting up that new generation for success in today's very uncertain environment.
Tangibly, what are the services that will meet those objectives then? What's the game plan, if you will?
So there's three big goals that we have in launching this, and this is in the initial 3 years, and we have a lot of ideas of where it's going to go from there. But the first thing that's never been done in Kansas in a very big mainstream way is a land link program. And so this has been talked about before as maybe like a dating site for retiring farmers or landowners and beginning farmers and ranchers. Basically, the gist of it is to make matches or introductions between a retiring farmer that doesn't have any heirs but wants to see a young farmer come on and take on their operation. And, similar for that younger farmer that doesn't have an opportunity, being able to step in and somehow take over someone's operation that they're not related to. So, how I envision that running here in Kansas is a lot more hands-on and not just a classified ad site. So there'll be an application to be part of this, both on the landowner's part, or retiring farmer, and on the land seeker or the young farmer, beginning farmer. And we'll have a person in the background that'll be interviewing each of those applicants and then providing some introductories to potential matches. So that is goal number one, having that service in place. Because I know at KDA, in our extension offices, we do have those inquiries a lot, and there's no one we can point to try to make those matches. The second thing is to take our farm analyst services that we do have in place right now and expanding them to work with more farm families and more in depth with farm families on planning for transition. And if you're not familiar with that service, that is a farm analyst that is employed here at K-State, and they come out to the farm, sit at your kitchen table, talk to you about your goals and your current situation, and then work through financially how that operation could change from where it is today. And a transition is a perfect example of the work that they can do in making sure that's financially feasible and how that might work before you go talk to an attorney to get that set up. And then the third thing is a training program specifically for beginning farmers and ranchers. And that's to teach those business skills, those technical skills, all the things that we think are very important to make that young farmer, beginning farmer successful as they take over an operation.
So you have a three-tiered service that this office will provide, and the notion here is that either party would enter their intent to participate, and then the process starts from there. Is that right?
Yes, that's partly right. I'll just emphasize all three of those are related but separate services. Okay. So we want to provide support for anybody at different levels of where they're at in their transition, but they don't have to participate in all of those. If they need technical support, we'll send out a farm analyst. If they are a beginning farmer and they need some training, we can put them in our program. If they just need to find someone to help take over their operation, that's what the Land Link is for. So those are the initial services, but like I said, we have a lot of enthusiasm of where this could go, and we will keep reevaluating and changing those services based on the needs. One really neat thing about this is who we have around the table. Right. So it's our AgriCon department spearheading it, but this is a partnership between Kansas Farm Bureau, Kansas Department of Ag, Farm Service Agency, NRCS, Kansas Livestock Association, Kansas Bankers Association, and Kansas Grazing Land Coalition. So we have a lot of great organizations around the table here that will help advise this office in how they can best serve the needs in the countryside.
To make it all happen, though, and you're stressing this because the search is on, a director will be hired here at Kansas State to oversee this Office of Farm and Ranch Transition. Where are you with that, Robin?
Well, we are looking for the perfect individual to fill that role, to be the lead person on this. So they will be the director of this office. And what we're looking for, in my mind, is somebody really with a passion to do this kind of work, that understands the need out there and really wants to be part of the solution to help farm families. Along with that passion, there needs to be some skills. So we are really looking for someone with expertise in finance, farm finance, hopefully knowing some of the legal and tax implications of farm transition, and having the expertise to actually help farm families one-on-one as a farm analyst role, being able to run that land link program and be that person in the background with the forethought on how to make those matches and successfully introduce landowners and young farmers. This is going to be a very specialized person we are looking for, and applications are being taken right now, and it's going to go quite quickly. So if someone's interested in being a part of this initiative, we are actually going to start reviewing those applications very soon. So I would encourage them to get in contact with me.
Contingent upon the hiring of that director, what's the expected timeline for launch of this service?
Yeah, so I have actually been getting calls and emails already, and that is wonderful. But we hope to be up and fully operational by early next year. So when I say fully operational, that land link will hopefully be up and running. We'll have a dedicated website, phone line, a farm analyst team that's ready to go out and do some of that financial analysis and technical assistance. And we will be having some big conferences next year too, just talking about farm transition and how farm families can start having those conversations and get the ball rolling on a transition plan.
Well, it's an important enough cause that the National Institute of Food and Agriculture, or NIFA, a branch of the USDA, is the one funding this endeavor. It's addressing a pivotal point in agriculture in this state, to be sure, and it's coming together very swiftly now. If you'd like to know more about this soon-to-be christened Office of Farm and Ranch Transition out of K-State Agricultural Economics. And Robin, if folks would like to touch base with you directly about any aspect of this, how might they do so?
Well, I think the easiest is go to agmanager.info, and under contributors, you'll find my name, Robin Reid. My phone number and email are listed there, but if you can remember, my email is just robinreid@ksu.edu, and that's ROBINREID. So I would love to hear from people. I know I've heard from others already just the excitement for us being able to start an initiative like this, and I just have very big plans and visions of where this could go.
Again, knowing that this has been an objective of yours for some time, congratulations on seeing it to fruition and looking forward to its debut, hopefully in very early 2022. Robin,
yes.
Thank you.
Thank you, Eric.
And what she's been referring to is this new Office of Farm and Ranch Transition out of K-State. Farm economist Robin Reid of K-State Research and Extension. You're listening to Agriculture Today. Finishing out this Agriculture Today, it's our weekly glance at the K-State Agricultural Events Calendar. Several things in that vein coming up in the near future. Here's Agriculture Today's Shelby Varner on a couple of them. Shelby?
The Kansas Beef Council and Kansas State University is hosting 2 beef quality assurance training and certification sessions in November. The first one is Wednesday, November 8th at Eureka Livestock Sales. The second one is Thursday, November 16th, hosted by the Washington Vet Clinic at the Washington Sales Pavilion. K-State veterinarian A.J. Tarpoff will be leading the training sessions at both locations. The curriculum will include beef quality assurance recommendations on animal husbandry, downed animal care, and low-stress handling. Those who attend will earn their BQA certification. Each workshop is free and starts at 6 p.m. with a complimentary dinner. If you plan to attend the Eureka training on Wednesday, November 8th, please register by today, November 1st, by contacting the Greenwood County Extension Agent, Lindsay Shorter, at 620-583-7455. Again, that is 620-583-7455. If you are hoping to attend the November 16th training at the Washington Sales Pavilion, please register by November 9th by contacting the Washington Vet Clinic at 785-325-2391. Again, that number is 785-325-2391. Also, the Kansas Forage and Grassland Council and Kansas State University is to host their annual Winter Forage Conference Wednesday, December 8th at the Harvey County 4-H Building in Newton. Agricultural specialists at the event will speak on a variety of topics, such as alfalfa production, crabgrass production potential, ration supplementation with high grain prices, combating woody encroachment on native range, and a farmer panel discussing their progressive approaches and alternative forage sources that are helping them to extend the grazing season. Featured speakers at this event include K-State Beef System Specialist Justin Wagner, K-State Forage Specialist Romulo Lolato, K-State Southeast Extension Agronomist and Forage Specialist Bruno Pedreira, and NRCS State Grazing Specialist Doug Spencer. If you are a current member of the Kansas Forage and Grassland Council, this event is free. If you are a non-member, the cost is $45. To learn more about this event, go to the Kansas Forage and Grassland Council website. To RSVP for this event, contact Harvey County Extension Agriculture Agent Ryan Flaming at 316-284-6930. Again, that is 316-284-6930. For Agriculture Today, I'm Shelby Varner.
All right, Shelby, thank you. And we've one more event to bring to your attention. It is the final installment in the series of K-State Garden Hour webinars for the year, and it is set for this Wednesday, November the 3rd, over the noon hour. The selected topic this time, creating winter interest in the home landscape. The presenter there will be Wyandotte County Extension Horticulture Agent Lynn Lowry, and she explains more about what she'll be getting into in that webinar.
I've been focusing on plants that give winter appeal. So that means we need to select plants that capture the imagination year-round. That may be color, it may be movement, it may be texture, and of course we don't want to forget about our furry friends, wildlife. So those are some concepts we want to keep in our mind.
Wyandotte County Extension's Lynn Lowry there, and she will be elaborating on those principles in the K-State Garden Hour webinar set for this Wednesday the 3rd over the noon hour once more. It's a free event, but they would ask that you register in advance. To do so, simply search for K-State Garden Hour. And incidentally, we'll be visiting with Lynn about those winter landscaping concepts during our horticulture segment right here this coming Thursday. And that's our time for today. Thanks for tuning in. Eric Atkinson here. This has been Agriculture Today over the K-State Radio Network.